morning, ladies and gentlemen. Welcome once more to the Financial Times headquarters in London for the latest instalment in the PWM Expert Series. Our subject today is investing in European equities. We'll talk about the impact this asset class can have on portfolios, as well as the risks we must be aware of. With me today to discuss this topic is Thierry Rojat from the Equities division of BNP Paribas Investment Partners in Paris. Good morning, Thierry.
Good morning.
And welcome to the studios.
Thank you very much.
If I ask you, Thierry, the revival in European equities, why has this been one of this year's most persuasive stories? Admittedly, there's a lack of opportunities in liquid markets elsewhere, but it's something that private clients and institutions have very much embraced.
Yeah, it looks quite astonishing indeed, since not so long ago, people were very concerned by the systemic risk associated with the Eurozone, at least. And considering all the way down since this period, Europe has faced some sort of shock and reform as never before. And you saw, for instance, countries from the peripheral Europe making massive reform, cutting labor cost, that helped very much quickly their current account balance, their trade balance. And so, of course, it had an impact on the unemployment. After that, you had austerity taking place almost since the beginning. And little by little, countries realized that the pressure on their population and the economy was far too demanding. And you saw, for instance, from the last European elections, that the populist political party took some significant advantage versus the other parties. So government realized that there was need to relax a bit the fiscal drag. And this is by nature something which should help household consuming and corporate spending. So all in all, the environment is improving. And on the top of that, I would say last but not least, the ECB has been quite proactive, maybe not as much as the Bank of England with its fund for lending, which helped very much UK to recover quicker than on the continent. But the ECB, little by little, and it's a complex structure with political issue as well, managed to assess the gravity of the situation and took decisions which were in favor of the continental Europe, and especially to start with the first LTROs quite a while ago, and more recently, their last action, which surprised most of the investors by its ambition, and that hopefully will resurrect the credit mechanism which is dysfunctioning in Europe. And it's key for this region to go ahead and to recover further than it has done already. So attractiveness of Europe is still there.